Yeah.
Hey there, this is Gretchen Lennon with Keller Williams in Atlanta. And I have on the call with me today Jonathan White with Infinity Tax Partners. And he's my amazing accountant that herds me like a cat every year to get all my stuff in on time. I'm not sure it happens though on time. Anyway, so I wanted to ask Jonathan a few questions since the market has been so busy in the last year and investors are out in droves. And so with that being said, we get tons of questions about what is 1031 exchange. So Jonathan's going to help us understand exactly what that is and how it can benefit you if you're an investor. So how you doing today, Jonathan?
Doing great, Gretchen. Thanks for the introduction.
Oh.
Mid-tax season, keeping most of my hair here. So
I
that's
know, I appreciate your few minutes here to help us get a better grasp on understanding what this is.
of course, my pleasure. So 1031 exchanges, everyone's favorite topic in real estate these days.
Yeah,
Uh, what what questions do you have for me?
yeah, just like basically, what is it? What is a 1031 exchange?
So a 1031 exchange was named after the section in the Internal Revenue Code, section 1031 in the Internal Revenue Code, which basically allows you to take a property, in this case, a real estate property that's used for business, and sell that property without having to recognize capital gains on that transaction. And if done properly, you can do this over and over and over again. So it's great.
Wow, that's interesting. So, is there like a cap on how much of the proceeds from your first property that you sell that you can spend when you buy the next one? Or is it the full amount?
It generally speaking, if you have, if you start a property that you're actually buying, it can go one way, but it can't go the other. If you have a property that you're actually buying more in than you're selling, then you don't have to worry. You're in the clear. But if you have a property where you're receiving more than you're actually exchanging, well, they call that boot, and you will have to recognize part of that as a capital gain. However, if so long as you're doing the transaction property and you're not receiving any cash or reducing any debts that you owed, say to the lending company, then you're in the clear. You don't have to.
Got it. So you want to buy for equal amount or higher?
Yes, that is what we're shooting for here.
Yes, okay. And so I have read a little bit about it. And so with the market being so crazy now and properties being hard to find, if someone sells their investment property, which they're selling really fast right now, and it takes a while to find your new property, where should we keep that money? Can it go into a regular bank account, or where does that have to be kept?
No, everything has to be on the up and up. Everything has to be structured in escrow accounts. You actually have to, at the very beginning of the transaction, structure it as a 1031 exchange. You do not want to go into this thing in the middle of the process and then try to structure it as a 1031 after the fact. There's all sorts of identification rules. You have to find the property that you want within a certain time period. We'll get into that in a little more depth in a minute, but you definitely want to keep that in an escrow account.
Okay, that's good to know. And there is a time limit. Is that correct? Is that what you just mentioned?
There is. So, for instance, you would have to select that property within 45 days. However, what gets people is you select the property and then you think you have another 180 days to close on that property. No, the clock starts on day one of you having to close on your the property that you're exchanging for. So keep that in mind, that there may be timetables that are happening at the same time that you want to try to avoid running out of time because you think you have. The clock starts once you've selected your property.
That makes sense. And for investors that have multiple properties, do they basically go by the same guidelines that a person just who's moving from one investment property to the next?
So yeah, it gets a bit more complicated, but yes, there are individual investors who have multiple properties, and real estate trusts that all participate in these deals. So whether it's a single property or a multi-property deal, you can structure it to where you can take advantage of these awesome tax benefits in the 1031 exchange.
Very cool. Okay. Wow. That's some good information. Can you think of anything else that maybe I didn't ask or that needs to be shared with these wonderful people that are looking for this information?
The only thing I will say is know what you're doing, consult with your real estate professionals and tax professionals, because if you're a residential property owner and you're trying to do this for the first time, there are a lot of caveats and things that can get you in the process. So just make sure that you're partnering up with yourself
Professionals, yes.
and
Yeah.
your other professionals in the process to make sure that it's being handled properly.
Okay, that's good. Well, I certainly appreciate you taking the time to be on the call today. And if anyone has questions, we can certainly get them in touch with you since you know a lot more about it than I do. And I really appreciate it.
My pleasure. Thanks for inviting me, Bridget.
Yeah, and good luck with tax season. You have a little bit of extra time this year. So
I know. I saw the deadline and I was getting mixed feelings because we were pushing really hard to get as many tax returns done, but it is nice to have a little bit of breathing room, definitely.
I'm sure people on my end are kind of happy about that too.
I'll bet.
All right, Jonathan, I appreciate it. We'll be in touch. All right.
All right.
Thank you.